Hello and welcome back. My name is Brandon Watson. Today in this video, we're going to take it a little old school. See, back when I first started this YouTube journey, I was posting 100% gainers left and right. But now that the market's a little overvalued and a little finicky, I'm going to instead stop focusing on just one stock and get back to creating a watch list of stocks. This will not only help us to increase our chances on finding the next top gainer, but will also help us to focus on just a select few rather than trying to scan during the trading day for something that probably already pushed without us. So in my last video, I talked about VEL, which as of right now is coming back to test supports after its most recent rally. And a month before that, I talked about CNR, which since then has gone up nearly 50%. While we wait for those to start and set up again, let's take a look at 5 potentials I believe have a chance of moving higher, starting with the Chemist Company under the ticker CC. CC, like many of the other stocks I find, first caught my attention with the most recent round of consolidation it had, which led to a rally from 27.5 to 35.5. Anytime we want a stock to move not just a tad bit higher, but significantly away from our entry point, we want to identify multi-month consolidation, which for CC's last 52 weeks had 2 rounds of consolidation, the most recent one being December through late March, as I just mentioned, and the first one from August to November of last year. This is good news, as the more buildup we have along the way up, the likelier the chance of this being a successful trade that moves higher to our price targets. Though don't confuse this with 100% certainty, as there's nothing certain in the stock market, and any bit of bad news can send this or any stock flying in the opposite direction. This is why risk management is key to surviving in the markets. Moving on to the volume, we can see that volume increased all throughout February after CC reported earnings. Then as price started to trend out of consolidation and expand its range, we can see the volume started to die out from the month previous, but was still above average compared to the rest of the 52 weeks. This is also a good thing as price starts to test the current resistance levels at $35. Moving to the 1 hour, we can see that for the last 10 trading sessions, price has been what is considered to be in a pennant with higher lows and lower highs, which is just a fancy pattern for more consolidation. This pattern, however, is what drives the plan for this play, as only 2 things are going to happen once price finally decides what it wants to do. It's either going to break out of its pennant and move higher, or it's going to collapse back down to another support. Another key indicator here is the 200 EMA. As you can see in the past, price has been holding the 200 fairly well. We want to continue to see the price hold at 200, otherwise you'll be holding on to a downtrend. So saying that, where do I think that CC can go? Well, as long as the pennant holds and we start to break higher, then I think CC has a chance of hitting at least $40, which coincides with the $40 and $42 targets that analysts recently gave it. If this is the case, then that will translate to an easy 20% gain, which then can be managed further if CC decides to take on the $50 level on the weekly chart, which from its current price will be a 50% gain. Next up, we have Tronix Holdings going under the ticker symbol TROX, which, similar to CC, is a basic materials / chemicals company with similar movement, though not as clean compared to CC. We have a push followed by a temporary downtrend after missed earnings, which then consolidated for 2 months before trending higher into an earnings beat and earning a ZATS #1 strong buy rating should you care about any of that sort of stuff. Just like CC though, we have higher lows followed by lower highs as price consolidates around the short-term 9 EMA and holds above the medium-term 25 EMA. The 1 hour also showing signs of consolidation at this level as the 9 and 25 intertwine with each other. The price target for this sits at $28, which comes from 2 analyst upgrades in the last 2 months, as well as it being a level of resistance that price topped out at back in 2017. What I like about the stock is the movement on the weekly chart. As you can see, for the last 3 weeks, price had built up above the 9 EMA as well as held over the $21 level of support. Now, assuming that $21 continues to hold as a support, I don't see any reason why TROX can't move up another 20% to meet those price targets, at which point we can see a price can move that last 40% up to its 2012 all-time highs at $38. The next 2 we're going to have up are New Gold Incorporated and Wheaton Precious Metals going under the tickers NGD and WPM. As talks about inflation circle the nation, I figure it might be wise to start taking a look at gold-related stocks, as gold acts as a sort of hedge against inflation, according to the fundamentalists. Now, if this is the case, then a chartist such as myself should be able to find stocks that are moving up, which is what we have here with NGD and WPM. The patterns with these 2 aren't going to have the same type of multi-month consolidation I normally look for, as these typically move with the ebb and flow of daily to weekly news. What we have instead are these moves based off prior support and resistance levels. EMA lines are indicating a clear uptrend is taking place on the daily chart as the 9 and 25 crossed over the 200 and are sloping upwards. The weekly chart for WPM again shows a 9 crossing over the 25, looking very nice, as NGD is technically speaking not considered to be in an uptrend, as the 9 and 25 are below the 200. This doesn't mean, however, that price can't cross and hold over the 200, thus bringing those 2 EMAs up and over. We can see that price is already starting to break over the 200 as of last week, and that the 9 just crossed over the 25 and is also sloping upwards, which is good news. NGD has highs at $2.40, while WPM's resistance sits at $58. If met, that would translate to a roughly 19 to 20% gain for the both of them. And again, if those price targets are met, then at that point, we could consider a higher move upwards, which for WPM would be new all-time highs the higher and higher it goes, while NGD's next resistance would translate to a 37% gain should it reach the 2.7 level from its current price at $2. For the last one, it's going to be a bit speculative as the 40% channel that was created for the last 2 months had been fairly dramatic after the earnings report in March. Ticker symbol AGS usually has rather low volume, sitting at 300,000 shares traded each day on average, though the relative volume picked up to 1.75 this past Friday as price tried to push for the $10 level of resistance. This is encouraging to see, as volume for Friday nearly doubled the average volume, with 546,000 shares traded for the day. The key for this move is to make sure that price not only breaks over $10 in the coming days, but also holds over it. The real move on this is from $10 to $12, which would yield you a 20% increase in profit. The EMA lines are looking nice on the daily, and if we look at the 1 hour, we can see those EMA lines are building and trending nicely as well. If and when price breaks over 10 and starts heading for 12, you can see that on the weekly chart, the $12 level resistance comes from not just the 200 EMA, but from also resistance that formed back in late 2018. I'm sure this is one of the reasons why Truist gave AGS a price target of $12 recently on May 7th. Now, assuming AGS hits $12 by retesting the 200 EMA on the weekly chart, then maybe we can look further out and see if price can start to take on the next level at $18 that formed right before this large drop. To close it all out, it should go without saying that these 5 aren't going to be investments. The idea is to make the quick and easy money by scaling inappropriately and taking profits when things start to look bleak. Realized profits are always better than paper profits. If a stock moves higher, then buy back in. If a stock moves lower, then that gives you a chance to make the same profit twice. As of right now, the S&P is going sideways after a long trend up the last 2 months. I'm not saying it can't go higher from here, but usually when things start to get shaky, it's better to manage your positions tighter than to let your money fly. Why? Because more often than not, if you don't have a strong plan or a strong stock, then the only place your money is going to fly to is straight to zero. Again, my name is Brandon Watson. If you have any questions, then feel free to drop them below. Let me know what you think about the inflation and what stocks you think might move up during this most recent market move. I love everyone's feedback, and I hope you all take care and have a great weekend.